Good morning, good afternoon, good evening. I am going to just do a quick video here for you guys. I'm sending this to a few people, so don't, if I say a name or if I'm like explaining one thing, if I say like, oh, this person mentioned this, this is why we're doing it. I've other people message me and just ask about certain things. So I'm going to address a few things in this video and we'll go for that. Mm. And today's a funny day. So we're gonna balance off with a little bit of fair exchange. I'm showing you a video and you're going to listen to me laugh about my day. I woke up this morning and I had a funny morning. So I woke up, went to the gym, had NyQuil yesterday just because I wanted a really deep sleep. And it made me super groggy this morning, which is really funny. And then I got to the gym, realized that my AirPods were dead. The case was dead. Don't have a charging cord. Uh, Forgot my shorts at home, right? So I was at my house, so I was training in jeans. And then the girlfriend's dog this morning, don't know where she took my sock. So I was literally, this is my workout outfit with a t-shirt on. And so that's how my day started today. So I was really hoping that training was going to go well, or else I was just going to, blame the workout outfit. But okay, let's get into the charts right here. So yesterday, let's do a quick recap, right? What we did, what we looked over. Oh, sorry, I want to give myself a little bit of credibility. So here's one account. I'm up $1,200. I locked it out. The other one's 1,500. The other one's about 16, and then one's about 800. And I actually didn't trade any of my take profit traders accounts today. I'm like, I'm done. I don't need to trade those today. But the market acted really well today, right? Yesterday I was explaining that if we're going bearish, right, having bearish market structure, you can see the price fold over, right, after a certain amount of time, and we're looking for price to go in this direction, and we're looking to take a trade somewhere around here, right, these areas, not necessarily on the way back up, not at the high, not past the low. And if you notice, the best times to take a counter trend trade are after the lows get taken, right? That gives you a little push, just like visually, I could show you here. Makes a low, takes it out, reversal. Makes a low, reversal. Takes it out, reversal, right? Here. Takes it out, reversal, right? So that's just a visual representation of how price moves. And a lot of the time, like I was saying before, if we're making bearish market structure, right, nobody really catches this area. Nobody really catches this area. A little bit of people to catch this area. More people catch this area here, and a lot of people catch all the way down here. So beautiful spot for actually the price to just say, okay, I'm just reversing. And so when the market gives a fold over or rolls over, right, there's key indications that you can say, okay, we're going bearish. And a lot of the time you're going to see price do this, and you're going to see price kind of like act a little bit volatile after it does your initial your pullback and your rollover here, right? We get a sweep and then price breaks a low. So in theory, the buyers kicked in, took out a high, and then the sellers kicked in really strong. So like this area is strongly selling pressure. It has a lot of selling pressure. So this high should be protected until we take out a target. And the target is something of a higher time frame pivot. You could use the, 2 minute, 5 minute, 10 minute, 15 minute, 1 hour, 15 minute, whatever the case may be. But if we're entering on the 1 minute or lower time frame and we're looking at the higher time frame, we need to know that there's a pullback and that the time of the pullback actually makes a difference. So when price pulls back and then rolls over, I'm just looking at this target here to be taken out. And then I take my logical targets. I hold the trade if it wants to continue, or I just allow it to run without me if it just wants to continue. I'm okay with that because I'm not trying to pinpoint tops and bottoms, right? That's just very silly to be like, I'm going to enter here and I'm going to exit here. You ever seen a guy post a trade like this and put no stop loss and put you 79 points? We 79 points. So you can take 79 points on this trade. Man, we're the best. We're the best trading group ever. Most people didn't take this trade. And most people probably, didn't enter here. and they definitely didn't exit here. That's very like that's an anomaly. Um, it's not the smartest thing to follow, in my opinion. Also, I want to explain the idea of taking partials, or as James in Valor says, trimming. Right? Trimming, the idea of trimming, right? If my stop loss is up here and I'm entering here, he's trimming along the way. Right? He's trimming along the way. He's taking partials. He takes it, entry here, he pushes down, say if he's in 10 contracts, right? So here, here's one contract, or sorry, this low here, maybe he takes, say three, goes a little bit lower, maybe he takes one, maybe there's three here, so there's seven, goes a little bit lower, here's maybe two, and then allows the rest to remainder to run to here, but it never gets that, and then comes back and stops him out, right? So he's got 6, 7, 8, 9, 9 contracts as wins, right? And then one at like a break even or a loss, right? So he's got 9 wins for his portfolio, right? And if he takes one loss, say the last contract did a loss, well, it's one loss and 9 wins. Well, now you're at a 90% win rate, which is incredible. It just sounds baller. If I were to take 10 contracts here and say this is going to be, just for easy, quick math, this is going to be 50 points, right, in profit. 50 points in profit. If the first one here, you take 3 at 20, the next one here is going to be, say, maybe 15. I'll just do, here's going to be 25. This is 25. So you got 3 at 25, right? 2 here, maybe at 30. Let's do 30. One at 20. So, right, 3 contracts, which is $60 times 15, right? So if I'm just going to do the quick math, because I don't really want to use too much brain power right now. 60 times 15, this is going to be 900. 20 times 20 is going to be 400. 3, so 60 times 25 is going to be 1500. 2, so it's going to be 40, 1200. Yeah, right. 40 times 30. Yeah, 1200 kind of thing, right? And then the remainder goes drop down to there. So 1500, 400, 900. So you got 4K in profit, right? You got 4K in profit on this trade. And the remainder didn't, the remainder went break even. So it doesn't matter, right? 4K profit. And the most that you got out of the trade was 30 points. If you were to take 10 contracts and just go for 25 points, right? Which is half of your stop loss here. 10 contracts times 25 points. Well, now 25 points. Now your profit for this trade here, that's the exact same entry, but half the distance of take profit and full contracts. Now you're at 5K. So you're $1,000 more than here. But yeah, you might take a loss, like price might reverse and top stop you out. But price might do something like this too. It might go down like this and then stop you out, and you might not get full, but it'll go to 25, right? So the strategy is to get confident in your levels, get confident in your trade, full take profit, full stop loss, but manage it appropriately along the way. If you're in a trade, say if you're in a trade here and your stop loss is here and you're targeting this low, right? Think of this at scale. I've always tried to teach this at scale. So for example, if this trade here, I was risking 100K. 100K for this trade here. And it goes, here's 1R, here's 2R, here's 3, 4, 5, 6, 7. Here's 7. So I'm trying to get 700K out of this trade, right? If price goes down 100, 200, then it goes to 300 here. As you're seeing price push down, right? The momentum, yeah, drag your stop loss down. Protect yourself, right? If it goes down to this level, yeah, you could drag your stop loss down a little bit too, because if it goes down this far and then wants to absolutely reverse, yeah, your stop loss is getting hit. So you could trail along the way, right? You can trail at logical levels. Break even is probably the safest thing to do if you just want to take your stop loss and reduce a little bit, right? But allow the trade to run for full target. once you get more confident in actually identifying proper levels, the directional direction of the market, right? And then now this trade here can run to full target, and instead of getting say 300K because you're partialing along the way because you don't know if it's going to go there. You're like, I'm not confident. I'm not confident. Right now you're getting a little bit more, and now you've doubled, more than doubled your take profit, so you can take the next trade with a little bit more confidence and more stress relief. You earn more. You build the proper habits of I believe of successful traders. It's just yeah, it's just not it's not the best thing to do, um, in my opinion. Right? There's always my opinion. Okay, so let's go over today, right? If I just look from the higher time frame view, right? What happened overnight? Just clean and clear. You got to be aware of what happened overnight. And you could say, okay, well, we just went sideways a little bit. We took out the low, we took out the high, we're trending to the upside. Okay, so the buyers were here, right? But not necessarily exactly on this order block. You're looking at like, hey, buyers pushed down, pushed up, so they're down here somewhere. Price then drops like a brick, right? All right, selling momentum, right? If I didn't take any trades on the open, I'm just waiting for price to give me a pullback and then roll over, and I can look for a smaller time frame trade after this candle closes. Right? So drop, price pushes back up, down, up, takes out this high, and then the sellers come back in. We got that like this move, right? That's why the chalk market structure break if the V-shaped recovery is very important because it's showing you, hey, we got momentum kicking in after taking out a previous level, right? This is my protected high. And I sent you guys a picture saying this is my protected high, right? Price pushed down a little bit here, took out this level here, protected high here. So we got protected high here. I'm looking for this target to get hit. So I'm entering on the way down. I'm entering again. I'm entering as price pushes down, and I'm taking my profits just after this level gets broken. That was my main trade, my first one this morning, 16, 15, 1600, right? So a bunch of contracts in that. Made a low, kind of pulled around a little bit, took out the high, and then momentum kicks in here on the way down. I'm entering, targeting this level, and closing the trade just after. Price then dramatically bumps to the upside. So we have that V-shaped reaction, right? The 1 minute is just showing it in like, 7, 8, 9 candles, but it took out the high, it held, it dropped lower, and it started to push up. I got back in, stopped loss, and I'm looking for logical levels to the left, right? Well, this is a 1 minute level, so it's not very important to me, right? Because I'm looking at higher movement. We can look to the left and we say this is a protected level that took out its target. So there's a lot of selling pressure right here, right? And then the next level would be somewhere up here. Price pushed up, took out this initial level here, right? I drag my stop loss up as it's pushing. It almost just runs straight to this level here, but look what happens, right? I exited most of my contracts around here, by the way, right? The remainder I was letting run to here just for fun. I was also going to scale in. Price pushed up, down, up. Oh, sorry, down here. All right, next candle opens, pushes down, and then pushes up. Right, so we have the break, the little close of the candle. Also, this high broke. Right, so we have a protected level. This movement here is pretty important to me. This low caused this high to break. If price comes back, this is the buyer's zone. So I want to see buyers come back in and make that bullish structure, right? I don't want to see what they did here happen because price pushed up here and then kind of like fell off a cliff here. And it was showing, hey, the buyers just doesn't seem like they want it. So this area here, as price pushed up, got approached this high, had a big bearish candle here, bearish engulfing candle. I closed the remainder of my position, right there. I know I was saying like, yeah, scaling's kind of silly and like, exiting and shit like that. It's silly. Sometimes it's just fun to do. It doesn't really make you more profit or like if mathematically it doesn't show it. But sometimes for me, what I'll do is I'll actually put buy stops or sell stops at certain levels. And if it gets triggered, I'll hear the noise that says, order filled or anything like that. And then I can bring my eye to the chart and then assess where I am. And if I'm going to get back into the trade or if I'm going to scale in, scale out, whatever the case may be. But that exited right there, right? And then just look at the next move, drop like a brick. Well, this drop here is going in the direction of the trend, even though we have big momentum to the upside. Look at the next candle. This is a 5-minute chart. Big bearish candle here. Well, if the momentum wants to kick in here and there's sellers here, right? I want to see price either hold and drop or pull back and then drop again. Price dropped, kind of pushed up, pushed down, pushed up. Look, we're getting the hold. Push up, push down, push up, push down, push up, and go, or like a big wick here and then drop. I got back in, targeted this level, right? And somewhere, I think I got in on this candle as its price is pushing down. Targeted this level, a little bit lower because I'm looking for bearish market structure. Stop loss above this wick here because it took out a little bit of sellers here, right? To make them flip into saying, okay, I got stopped out, right? Now I'm buyers, and then price drops again now. So now it's going sellers. So there's a little bit of a trap, right? Place my stop a little bit above the high here just to protect myself. And as price is dropping really quickly here, I can drop my stop loss a little bit lower, right? Price hits my level here, and that's another, bunch of money. Price pushes up, holds, pushes again, breaks the high here. Where are we going? Well, we have this target of this previous high because this was a big move here, but also to the left that we didn't take out this previous high to begin with that we just came up next to. So sellers, they wanted it. Price came up to the sellers. Sellers don't want it. This high is getting taken out, but the original position is getting taken out. Right. So on the way up here, I have a picture. Let's see if I can copy this, paste. Right. I scaled out a little bit already on this trade, but as price was pushing up, I entered, price pulled back, started pushing up again, entered, and then closed. Right. Right here. So on the way up, it's about here, targeting a little bit above, stop loss right there. Right? It's not the highest trade, but it's accurate. My accuracy is very high. Anyways, I hope that makes sense. The last thing I want to do is I want to go over a guy messaged me and just had a question about the EMAs. If I throw the EMAs on my chart, actually, you know what? I'm going to do this and I'm going to delete as much as I can. Right? Just deleting the brushes. Not necessarily wanting to delete the entries or fills or anything or the targets, but I just wanted to delete a little bit of these here and just show you those are my entry. That's my entry. Here's my entry. Something I entered here. I want to show you a little bit of an exercise here, and then I entered here, targeting up here. All right, I'm going to show you in a little bit of an exercise. If I was just to say, I want to wait for a price to pull back, just visually pull back, and then I want to take a trade always in the direction of the trend, and I can't figure out which direction the trend is going. Easiest thing to do is throw a moving average, a couple moving averages on your chart. The 20 and the 50 is very, very common. 20 and 50, not one. Oh, no, hold on. Which ones? Oh, I only have 1 and 2 on. All right, 50. So I'm going to turn 9 off and put this on blue and red. All right, so 20 and 50 is like one of the cleanest ways to look at the chart and just say like, okay, well, the trend looks like it's bearish. it's the most common, I'll say that, right? You can get a little bit more sensitive if you put this a lower, right? A lower number, you'll see that it adjusts. If I put this to a very large number, right, it's going to be a little bit more smooth. It's averaging out the past 50 candles, I'm sorry, 50 candles and the last 20 candles and looking at the closes, right? So from the closes, you can see that price was pushing up here and then the red crossed over the blue. So the 20 past previous candles are going bearish and the last 50, right, are just slowly shifting bearish. That's why it crosses. So we have two shift or across there. So from here, if I was just to say, oops, I think I clicked on 20. If I was just to say, take trades in the direction of the EMAs, right? Red EMA is below. I'm looking for shorts. The momentum is short, right? This trade is valid. Price pushes down. This trade's valid. Price pushes up here. I entered, right, prior to the break. I was pretty confident about this one, but most of my position for this one was exited about here. I'm not letting a counter trend trade go as far as a pro trend trade. The 5 minute time frame is bearish. You can just see this massive drop. So going counter trend, I don't expect them to go as far. I'm not as confident, right? You could just see if you have $1 billion and you're putting this to be expensive and you're selling up here and you want to exit your position down here, right? If it comes up here, you're buying into or you're selling more. You're selling more. You're shorting more, right? Because it's getting higher and higher. So the higher it goes, the more expensive it goes, which is more appealing to the larger traders. So as price pushes up, exited quick, and then the EMAs cross bearish again, which gives me more confidence to take shorts. EMAs cross bullish here, right? I can take a little bit more, uh, I can have a little bit more confidence with my trades going long. And then if you notice, look, the price now is just, it's taken out the lows, or sorry, it's taken out a ton of lows. It's taken out major highs now, right? Where are we going to go? Well, if it wants to reach back up to here, it needs to make you think the market's going short so that you get in short so they can accumulate more, just like I said here. As price is pushing up here, most people think it's going long, so they start buying, and all the bigger traders are going shorting, and then causes the price to just plummet. Here, price is coming up. Now people are thinking it's going long, but if the market overall wants to get higher, right? This being a bullish movement is going to attract a lot of people going long. We need to then allow either price to hold or a big pullback quickly, followed by a massive reversal here, which traps people going short and then allows the price to go long. And so if I was just to take the trades in the EMAs, basically this is basically what you would trade. This is it. And if I do a quick exercise with just engulfing candles, just from the opening, where's the opening? Here's the opening. If I was just to say, you know what, I'm just going to trade up until this point here. Let's just do this window. I don't know what the result is. I don't know. I haven't tested it at all. But if I'm looking at the EMAs and the EMAs are bearish and I look at engulfing candles, all right, let's do engulfing candle indicator. Did it, does it only do the bear bullish? That's dumb. That's a shitty indicator. Engulfing indicator detector. No candle detector. Okay. Engulfing bar. Okay. Let's just do this. No, I don't want to look at both. This is going to be dumb. Anyways, let's just do this. EMAs are bearish. Let's look for bearish engulfing candles. Well, we had a bearish engulfing candle here. If I was just to enter on the close and say I'm going for 10 points. No, let's do 20. 20 for shit's sake, right? 20 for shits and giggles. Enter on the candle here, right? My stop loss is at the high. I'm looking for a quick win. Well, this now is a win. Next engulfing is here. There's another engulfing, stops over the high, win. Here's another engulfing, stops over the high. Here's an engulfing, right? That's a win. Another engulfing, Stops at the high. All right, we get stopped out. Oh no, we get stopped out. Who cares? Who cares? Right. Another engulfing here. Stops at the high. We get stopped out. Engulfing here. Stopped out. Engulfing here. We win. So these are all 20 points. All right. And I'm just putting the stops at the high. So like, yeah, this one's massive risk to reward. But your accuracy is going to be extremely high on these ones. One thing that I actually wanted to say before I calculate these, if your accuracy, if you want your accuracy to be high and you want the amount of money you earn per trade to be high, the volume of trades is going to be very low because you need to be very selective of the trades that you're going to be taking. If you want to take a shit ton of trades and earn a lot of money, your win rate is going to be quite low because you're going to take hit after hit after hit, but you're just going to keep slamming the trades on the chart. You're going to be absolutely crazy. If you want the number of trades to be high and you want the accuracy to be high, you actually need to adjust your profit and allow the trade not to run as far so you can collect your profit really quick. So it's a winning trade, winning trade, winning trade, winning trade, winning trade, winning trade. And with the prop firm space, if you go for, say, a 2K target, right? 2K profit, right? Is it better to do that in one trade or is it better to do that in, say, 20 trades, right? That's what you need to think for yourself. If you want to make a lot of money on your trades, right? And you want a high accuracy, you're not going to take many trades. If you want a high dollar value on your trades and you want a high accuracy, or sorry, and you want a high number, right? You're just going to take small ones over and over and over and over, and your win rates is just going to be incredible. Like I can get a strategy up to like 95%, 95%. I can get pretty consistent. But so this idea here is like the win rates quite high, but the risk to reward is low. So the amount of money that you're earning per trade is low. You're going to take a lot of trades, but you're going to win a lot, right? So this idea here, we're just going bearish engulfing. Is this an engulf? Nope. Then we're bullish. So and we're going for what? 20, 20, yeah, 20 points. 20 points here. You get stopped out, and then it goes bullish again. You get stopped out. There. Yeah, there. And then it go bearish engulfing. That's a bearish engulfing, right? You get stopped out on that one. That sucks. That was a shitty wick here. So stop out, stop out, stop out, stop out, stop out, stop out. Okay, so we have currently 1, 2, 3, 4, 5, 6 wins. 6 times 20, 120 points. Then we got a loss here. I'm going to calculate these just to show you strategy. All right, 21 points, 21.5, 21.5, 16.75, 9.75, 17.5, and 10.5. All right, 97.5 minus 97.5. Right, so you got 22 and a half, right? Times, say, if you're going to do one contract, right? You're almost at 500 bucks. 22.5 times 20, 450 bucks. All right, so you got $450, right? You made $450 on this day right here, just slamming bullish engulfing trades in the direction of the EMAs. This is not a strategy. This is definitely this is definitely not a strategy. But the overall idea is to say, if you understand the market and you know certain concepts, you can build mechanical strategies that give you an edge, that give you a profitable result, right? We had what? 1, 2, 3, 4, 5, 6 losses, right? So we're at a 50% strike rate, but overall, our dollar value here is greater than the losses. So basically a break-even strategy, we're slightly profitable. Nothing fancy, but if you were to say, hey, I'm waiting for one engulfing pattern that is very clean. And I want you to think about this. If I had one engulfing strategy, or sorry, if I take one engulfing candlestick and I put my stop loss above the high, and I build the confidence and I have the confluence of the movements in my direction. I have logical targets. I have the momentum. I have, all these different concepts, the sweep, the liquidity, all this stuff correct. I'm matching the higher time frames, and all of a sudden now, look what happens. You find one engulfing candlestick that has momentum. We have logical targets, right? We have logical targets to the downside here. Oh, my speaker just died. Here, we have logical targets to the downside, right? We have momentum. We had a sweep. The 5 minutes looking like it's going to be great. 1 minute's involved here. Now, look at this trade. I can go for, say, 30 points. With one contract, 30 points is $600, right? You cannot tell me that you can't wait for a really nice setup, have an engulfing candlestick, and almost do a one-to-one and get $600 and close that account out for the day. $600, if you could do this 3 times a week, that's $1,800 a week, right? There's 22 or so trading days in a month, right? So that adds up to quite a bit of money, more than most people make in their full-time job. You're making $600 in a trade. If we go to the previous day, let's go here. I'm looking for the same thing. I'm looking for price to give me a nice direction, and I'm going for my 30 points, maybe like a one-to-one, right? Almost a one-to-one. Trying to get that $600. Don't think of dollar value, think of scalability. If you can consistently do something, then if you're making $600 every single day and you're doing that for 30 days or 60 days or 90 days or 120 days, right? I think my win streak of one strategy that I built a while ago, I trade on one Top Step account. I only go for between $200 and $500 a day. That strategy, at a point when I was comfortable with it, all right, and I didn't over leverage. I was doing, I think I was on like a 110-day win streak of just every single day, 2 to 500, 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 right? And that paid my bills. That allowed me a little bit level of freedom that most people don't have. So if I'm looking for my $600, which is 30 points, where would I go here? Well, price dropped dramatically just before session, pulls up, right? We push up, right? We pull back down, we push up aggressively, we push back down. This low here caused this high, so buyers are still here. Price pushes down or up, down. We now take out the buyers. We have sellers here. We're important. Price is now giving us a little bit of an indication to say, hey, pay attention. Price pushes up aggressively, pushes down, up, down, takes out this high, drops right there. Price pulls back, right? And then drops and then immediately plummets to the upside without giving our engulfing pattern here, right? But look, when we took out the sellers, price pulled back and gave you an engulfing, right? That's what you could say. You could say, I'm waiting for the higher time frame trend, the picture, a little bit of a pullback, and I'm looking for the sellers to get involved. I want to pull back after the sellers get involved, and then I want to see the engulfing candle because we know the engulfing candle to be the change of market structure on a different time frame. This is an engulfing candle. There's my stop loss at the high. 30 points is there. $600. So you got $600 today. You got $600 yesterday. You didn't hold for the whole trade. It's basically a one-to-one R. All right, let's go to the next day. Price drops to the downside, takes a bunch of liquidity out here, and then pushes up aggressively. Right? Pushes up aggressively. All right. When are we getting in? You know the direction. We want to see a pullback. So sellers come in, sellers, 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 buyers. All right, we're looking for the pullback in the engulfing. Price pulls back and actually takes out this previous low. But if it takes out this previous low here with a wick, and it doesn't look like it's actually going to go bearish, right? And by that, I mean if price pulls up here and then gives you a bearish push here, right? Don't take it. But you can now see we're pushing to the upside. So we just took a little bit of liquidity. It's not a commitment because it's not a closure below, which makes sense. Price pushes up, down, gives you your engulfing candle. We've already taken out the high, so it's not the absolute best risk to reward, but 30 points is there. All right, there's another 600. So 6, 12, 18. This is Tuesday. Where now we're going on to Monday. All right, where are we going? Well, price pushes up, pulls back, takes the high here. All right, we're looking for bulls or longs. Price drops like a brick. All right, okay, maybe we're looking for shorts. Price pushes up here, takes out this previous high, pulls back, and then shows a little bit of momentum to carry to the upside. So we actually took out a high, made people think we're going long. Then we went short, made people think we're going short. We pulled up to where the sellers are, right? It's not a perfect order block, but it's a zone. It could be a little bit above, it could be the whole area. Price sold off a little bit here and then showed that we had a V shape here, right? There's your engulfing, stop loss at the low. 30 points is there, right? There's your low. There is, so 6, 12, 18, 24. $2,400, one trade. I'm looking for a really high quality trade, and and that's it. You could do that one strategy. That would be very, very simple. Um, that's going to be it for today. I don't know how long this video went, but I believe it went on for quite a long time. Let's see if I can close it out now. Have a wonderful rest of your day. If you guys have any questions, if you have any concerns, if you want to go over anything, let me know. Gather some data for this. See if you can visually identify some areas. Holy shit! My text is my girlfriend messaging me. She's just ding, ding, ding. Yeah, try the strategy. Try to figure out some idea of identifying the pullbacks and identifying where the momentum's carrying, and see if you can identify the area which might be a good spot to enter. You're probably not there yet where you go like, I would exactly enter right here with my stops at this high and I feel very confident to hold to the low. But if you said, hey, I want to identify and practice where the best spot to enter a trade is, well, you would say, well, I think somewhere in here. And then, it looks like maybe a little bit here, but maybe I take a loss here. Maybe there's no win. Maybe that's a harder trade. Oh, here's a trade. And then we start dropping. So like maybe here, right? And then what we can do is identify what's the candlestick pattern or what you see in these areas that's consistent. And so let's go from there. Have a great day, like I said, and we'll chat with you again on the next video. Cheers.